Berkshire Hathaway is one of the largest and most successful conglomerates in the world, with a market capitalization of over $600 billion. Led by legendary investor Warren Buffett, the company has a diverse range of businesses, from insurance and energy to retail and manufacturing. But how does Berkshire Hathaway actually make money? In this video, we'll take a closer look at the key drivers of Berkshire Hathaway's profitability. The insurance business is a major source of the company's profits, accounting for approximately 20% of its revenue in 2020. The company has a number of insurance subsidiaries, including Berkshire Hathaway Reinsurance Group, Berkshire Hathaway Primary Group Geico, and Berkshire Hathaway Specialty Insurance. These subsidiaries offer a range of insurance products, including property, casualty, life, and health insurance. One of the key factors that sets Berkshire Hathaway's insurance business apart is its underwriting discipline. Underwriting is the process of evaluating and pricing insurance risks. Berkshire Hathaway's insurance subsidiaries are known for their conservative underwriting standards, which means that they only write insurance policies that are likely to be profitable in the long run. This approach has helped the company avoid the losses that can come from underpricing risk, which has been a problem for some of its competitors. In addition to underwriting, Berkshire Hathaway's insurance subsidiaries also generate significant profits through investment income. When policyholders pay their premiums, the company invests that money in a variety of assets, including stocks, bonds, and real estate. Over time, these investments generate returns that help to offset the cost of paying claims. Berkshire Hathaway's insurance subsidiaries have also been able to take advantage of their financial strength to enter into reinsurance agreements. Reinsurance agreements is a process where one insurance company transfers some of its risks to another insurance company. By providing reinsurance, Berkshire Hathaway is able to generate additional revenue while also diversifying its insurance risks. One of the key challenges facing Berkshire Hathaway's insurance business is the low interest rate environment. When interest rates are low, it becomes more difficult for insurance companies to generate investment income, which can put pressure on profitability. However, Berkshire Hathaway's strong underwriting discipline and focus on long-term value creation have helped the company navigate this challenging environment. Berkshire Hathaway is known for its successful investment strategy, which has been led by Warren Buffett and his team for many decades. The company's investment portfolio is diverse and includes a range of assets, such as stocks, bonds, real estate, and even whole businesses. One of the key features of Berkshire Hathaway's investment approach is its focus on buying high-quality businesses at reasonable prices. This approach is sometimes referred to as value investing, and it involves looking for companies that have strong competitive positions, good management teams, and the ability to generate consistent earnings over the long term. Berkshire Hathaway typically holds these businesses for the long term, allowing them to compound in value over time. In addition to buying whole businesses, Berkshire Hathaway also invests in publicly traded stocks. The company's investment portfolio includes holdings in a range of well-known companies such as Apple, Bank of America, and Coca-Cola. Berkshire Hathaway's investment team is known for their in-depth analysis and disciplined approach to investing, which has helped the company generate significant returns over the years. Another important aspect of Berkshire Hathaway's investment strategy is its focus on generating a high return on equity. This means that the company seeks to generate strong returns on the capital it invests, whether that capital is invested in whole businesses, stocks, or other assets. By focusing on generating a high return on equity, Berkshire Hathaway is able to compound its investment returns over time and generate significant value for its shareholders. Berkshire Hathaway is also known for its large cash holdings, which it refers to as its war chest. These cash reserves give the company the ability to make large investments or acquisitions when opportunities arise. Buffett has often said that he likes to keep a large amount of cash on hand so that Berkshire Hathaway can take advantage of opportunities that may not be available to other investors. Berkshire Hathaway also owns a wide range of operating businesses across a variety of industries. These businesses include everything from retail and manufacturing to energy and transportation. One of the key features of Berkshire Hathaway's operating businesses is their focus on high-quality products and services. Buffett has always stressed the importance of having a moat, a competitive advantage that helps protect a business from competition. Berkshire Hathaway's operating businesses typically have strong brands, loyal customers, and a reputation for quality, which helps to create a moat around their businesses. Another important aspect of Berkshire Hathaway's operating businesses is their decentralized management structure. Rather than managing each business from a central headquarters, Warren Buffett and his team give the managers of each business a high degree of autonomy to make decisions and run their operations. This allows each business to operate in a way that is best suited to its particular industry and competitive environment. Berkshire Hathaway's operating businesses are also known for their strong financial performance. Many of these businesses generate consistent earnings and cash flow, which helps to support the company's overall profitability. The operating businesses also provide diversification benefits, as they are spread across a range of industries and geographies. Some of Berkshire Hathaway's most well-known operating businesses include Geico, an auto insurance company; Ben's Railway, a freight transportation company; Fruit of the Loom, a clothing manufacturer; Duracell, a battery manufacturer; See's Candies, a confectionery company. Warren Buffett and his team have a reputation for finding high-quality businesses at reasonable prices and investing in them for the long term. One of the most notable aspects of Berkshire Hathaway's acquisition strategy is its focus on acquiring businesses with strong brands and competitive positions. Buffett has said that he likes to invest in businesses with a durable competitive advantage. In other words, a moat that helps protect the business from competition. This focus on high-quality businesses has helped Berkshire Hathaway build a diverse portfolio of companies across a range of industries. Another important aspect of Berkshire Hathaway's acquisition strategy is its willingness to pay a fair price for a business. Buffett has said that he is willing to pay a fair price for a great business, rather than trying to buy a mediocre business at a bargain price. This approach has helped Berkshire Hathaway acquire some of the world's most successful businesses, such as Geico, Ben's Railway, and See's Candies. Berkshire Hathaway's acquisition strategy also involves a focus on long-term value creation. Rather than trying to make short-term gains, Buffett and his team are focused on building value over the long term. This means investing in businesses that have the potential to generate consistent earnings and cash flow, and then reinvesting those earnings back into the business to support growth. One notable example of this approach is the acquisition of the battery manufacturer Duracell. When Berkshire Hathaway acquired Duracell in 2014, it did so through exchange for its stock in Procter & Gamble. This allowed Procter & Gamble to divest a non-core business while giving Berkshire Hathaway an ownership stake in a high-quality business. Since then, Berkshire Hathaway has focused on improving Duracell's operations and investing in new growth opportunities, such as the expansion of its rechargeable battery business. In summary, Berkshire Hathaway makes money through a variety of sources, including insurance, investments, operating businesses, and acquisitions. These businesses are managed by a team of experienced executives and overseen by Warren Buffett himself. By diversifying its sources of revenue and making smart investments, Berkshire Hathaway has been able to generate significant profits for its shareholders over the years. Thanks for watching this video, and we hope you found this information informative and useful. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more content on finance and investing. We appreciate your support and look forward to bringing you more videos like this in the future.